Justin says, can you show us how you day trade and deal with volatility of prices, like prices going up and down, dealing with fear and greed? Sure. Greed. Sure. This is what we do every day, Justin. So I can tell you this. I do nothing different. I've done nothing different over the last, month? I've done nothing different over the last month than what I've done over the last whatever years. So if anything, I like volatility because when we had a lack of volatility, it really destroyed my day trading opportunities. We didn't get a lot of movement, especially directional movement. So I didn't do a lot of day trading. So the volatility has been a blessing because it has opened up opportunities to trade. But as far as an approach, nothing different. Nothing changes. And I forgot I was talking to yesterday. I don't think it was one of you guys on the platform. No, it was. It was Sarah on the platform who was, no, it wasn't Sarah. No, yeah, it was Sarah, who was talking about with the different volatility, how should I change and be more aggressive with my entries? And I'm like, why? I gave her some ideas on how to, but I also said, hey, but if you keep in mind, if you're going to be more aggressive, this is what happens on the backside. But you don't need to do anything different. I think a lot of people assume that because, and again, it's all the hoopla that's going around us. Now think about it like this, right? If you just ignored the news and you didn't listen to anything, you didn't know anything that was going on, would you take a different approach to the market? No, you'd probably do the same thing, but we get all distracted by crashing stock markets here and this there and that there that we feel like we have to do something different. And the truth is we don't. We want to be systematic with our approach. We want to approach it the same exact way. We don't want to let our trading psychology get out of whack because of greed and fear, right? Greed and fear is self-created, right? It's self-created. There's no more fear in the market today as there was, the other day. So we just want to stick to our plan. So as far as the day trading goes, if we see an opportunity, I'll show you. And we should have some on the pound dollar as we're tracing right now. But I do nothing different. I do nothing different than I've done in the past. And we'll see if the pound dollar can get it back up and give a double top. We actually just got a lower low, lower close. But yeah, nothing different. I'm paper trading now, and the pound dollar is going down, and it reversed. I'm testing myself, and staying in the trade. Good. Should I stay in the retracement? What does your plan say? Does your trading plan say you should stay, or does it say you should exit? So easy being a coach, right? What does your plan say? That's my answer. It's kind of in development. All right, so how do you know what to do then? So the reason you don't know what to do is because you don't have a fully developed plan. No. I don't want to hear anything about, but I would say structure tells me to, I think. No, we want to take thinking out of it. It's either what do you do or what do you not do. It's black or white. There's no thinking. There's no thinking in trading, right? There's no thinking in trading. You want to have a fully developed plan. Your plan should encompass a lot of things. Obviously, we teach it to you here in the training. But the three main things is you want to have rules for entries, stops, and targets. So if you don't know your entries, stops, and targets, you should never enter a trade, right? You should never enter a trade without knowing where your stops are at because your stops are your risk. You should never enter a trade knowing where your target's at because your targets are going to help calculate your risk profile. So if you don't know stops and targets before you enter a trade, it's a bad trade. Because how else can you measure your risk reward? Let me ask you this. How did you measure your risk reward in this trade? Or did you measure your risk reward? You don't have a risk reward, do you? You can't because you don't have targets. Yeah. So how do you know if you're in a good risk situation? How do you know if you're in a situation where you have a positive expectancy? What if your risk reward is negative 81 to 1? Is that a situation that you consistently want to be in? Yeah. So does that make sense, guys? About if we don't know the full story, We can't be involved in the trade. So, and it doesn't matter if it's paper trading or demo trading or live trading. A lot of people say, well, Akil, it's just paper trading. It's just demo trading, so it doesn't matter. It does matter because you're building habits. It does matter. You're building habits. Because if you I can tell you from personal experience, if you have bad habits in your paper trading, those bad habits will carry over into your real trading. Right? If you have good habits in your paper trading, those habits have a better chance of carrying over into your real trading. It was the same thing. We had a conversation the other day. I forgot who it was, but it was someone responded to a post I wrote. The same thing with people that are they complain about, oh, I'm good at trading, but I don't have any money I don't have enough a big enough account size to make any type of significant profit. And it's like, well, don't worry about your account size at the moment. Think bigger. Stop thinking right now, right? Right now, you may have a $100 account and you make 1% on that $100 account and you made $1, right? Whoop-dee-doo, right? You made $1 a month. You make 1% a month, you made $1 a month. But think bigger picture, right? If you can make 1% a month, and I'm just random number, that's not necessarily a great number, but let's say you make 1% a week. 1% a week with your $100 account, in theory, you should be able to make 1% a week with a $10,000 account, with a $100,000 account, with a $500,000 account. Now, all of a sudden, you're doing the same thing. You're taking the same actions, but the result is different. Well, why is the result different? Did you do anything different in your trading? No, you did the same damn thing, right? The result's different because you just have more capital. And that's the easy part, changing the multiplier. But the person that developed those habits with the $100 account, that's the same person. Those are the same habits that you would use with the $500,000 account. And vice versa. You see people that have bad habits with a little bit of money, they'll have bad habits with a lot of money. Right? Forgot the saying. One was saying money was it money just emphasizes your true character traits? I'm sure there's a much better way to say that. But like people that are a-holes with money, they were a-holes before they had money. They're just even bigger a-holes now. Right? So if you had bad habits with no money, you'll have bad habits with lots of money. It'll just hurt you even more because it'll be on a bigger scale. If you have good habits with little money, you'll have good habits with a lot of money. It'll benefit you more just on a bigger scale. So it's a lot. Let me just is it a good idea to go in without a plan like I am now to get a feel for things and develop a plan? No, you can look at the markets. You can hang in the live rooms and start developing a plan. Yeah, I think that's a good idea. I wouldn't trade. I would just look at the markets and just take pretend trades in your head. So one step below even demo trading, right? Don't even execute anything. Just say, hey, make predictions. Analyze the charts and make predictions. Say, hey, I identify prices here. I predict that price will go there. How will price get there? Probably a pullback. Now, how can I get involved in this pullback? Well, there's lower low, lower close, double tops, double bottoms, right? Just run through the predictions in your head like you're watching film, right? But don't actually execute any trades because you don't have a plan, right? There's no way you can execute them the right way. So just run through and just make predictions. Make predictions in the market and then come back and look at them and be like, oh, look at that. It worked out. And then as you're making those predictions, right, continue to analyze and start figuring out what type of approach you want to take to the market. Do you want an aggressive approach? You want a conservative approach? You want to be a pullback trader, a breakout trader? And then slowly start putting the pieces together and start developing that plan. And then once you develop that plan, obviously you want to test it. You can paper trade it while you're testing it, right? So you can kind of paper trade it and pretend and make predictions and do stuff like that while you're doing the back testing to get your actual numbers. Your swing trading, or says your swing trading strategy does not mean it's going to work on day trading. That is correct. They are two different beasts. My day trading strategy is completely different than my swing trading strategy. Just it's a lot harder to back test day trading like front testing because I can test myself and see how things move and analyze the market for a plan. I don't necessarily agree with that at all. I don't think it's a lot harder to backtest day trading at all. So I would say no. They're both hard. They both suck. Could have said, Justin, I see what you're saying about front running. Just reading the conversations now. Justin, I see what you're saying about front running, but you still need to document it to see what your results will be, and definitely need to know what your risk reward is on trade. Yeah, again, yeah, that's big. I'm documenting my wins and losses as I front run. Here's the thing, though, Justin, you're documenting your wins and losses, but it doesn't. Those numbers are empty because if you don't have a plan, what are you actually documenting? Right? If you don't know, and again, the main thing I just asked you, where you don't know where to take targets on the trade. So how can there's no consistency in that? So I would say I would say continue to predict. There's nothing wrong with predicting. I would go into the markets and do the exact same thing you're doing now, just minus the actual trade execution. So go into the markets, do your analysis, make your prediction, decide on how you want to execute the trade, and then start making predictions for stops and targets. Right? Obviously, you had stops on, so I'm assuming you have a rule for that. Hopefully, right? Start making some predictions for targets. Start putting little lines in your chart and saying, okay, I think we're going to go here. I think we're going to go here, and start developing what type of trader you want to be. Do you want to be a trader that takes targets at a retested previous structure? Do you want to take targets at an extension? If you do want to take an extension, you want to take it at 127, at AB equals CD, a previous level of structure. Start figuring that out. And then once you kind of have a feel for, this seems to work better, boom, now make it rules based. If price action pulls back, then I enter on lower low, lower close. If I enter on lower low, lower close, then targets go at an AB equals CD extension. Right? Now you have rules. And then again, you can still go through a process of playing around with those rules, and they may get tweaked. And then after you feel comfortable, you're like, hey, I like this. This is how I want to go about it. Then enter that back testing process. Right? And of course, during that back testing process, it's going to be the same thing. There's going to be all types of adjustments that are made. Right? Maybe you see that it doesn't work. Maybe you change your mind on targets. Maybe you do multiple targets. Right? There's all types of stuff that could be figured out during that back testing process. But at least it's rules based, and you have the full trade. You have your entry, stops, and targets, and it's consistent instead of just being kind of based on think, feel, and all that fun stuff. So I think you're on the right track. Again, I'll just take one step back. Instead of actually paper trading, just predict. Because the biggest flaw that can happen with paper trading, this is the hard thing, is if you're good, you're going to start believing you're good, and it's going to reinforce those bad habits we talked about earlier. And I don't wish this on anyone, but what happens is when you start thinking you're good, and I did this so many times, I was a demo king. I swear I never lost on a demo account, right? You're going to think you're good, and you're going to start telling yourself this, man, I'm so good. Why am I wasting my time paper trading? Why am I trading with this fake money? I should be making this real money, right? You guys ever been there? You guys ever question yourself after a really good demo trade? Like, why am I wasting time with this fake money? What? There's real money to be made, and I'm the one that should be making it. You see my track record, right? And then what do? You start loading up that, you load up that real account, and as soon as that real account hits, boom, slapped in the face, you start losing money. You start losing money real quick, right? And then you start making all these, and you don't have any rules, so you just start doing more instinctive stuff, right? Revenge trading or fear targets and fear stops and all that stuff. It just digs you into a deeper hole, and you go back to demo trading, and then you start the process all over again. I did it about 4 or 5 times where I would go back to demo trading, like, yeah, I just gotta make this one adjustment. Yeah, I'm gonna test it the right way this time. And then you get like halfway through testing the same thing, like, man, I'm making all this demo money. Markets are moving. I should be making this real money. And then the market baits you in again, and it takes it from you. Takes it.